I took a Tesla 3 DTE call at the open today. I'll tell you exactly why I was wrong and what I did about it. But before we start, I want to see if you can practice identification / pattern recognition. So this is the event that we're looking for today. We're looking for a bullish reversal. So keep your eyes open and let me know when you think you see it. Now, we're here at the open. We went ahead and filled in the gap on the Tesla stock. Now we're switching over to the SPY and we're going to fill in the gap on Tesla and on the SPY. And we're going to take the best opportunity that presents itself. All right. So we have two stocks prepared. So right now we've had a big move up and we're looking at a pullback. So we're on the SPY, looking at the pullback, assessing the pullback, and now we're looking for an opportunity to enter. All right. Pullback has held at about 50%. And what do we have here? We have the bullish reversal. So this is an entry. So we went ahead and jumped in a 460 call on Tesla. 460 call. We put our stop loss under the event. All right. The event that we entered was the bullish reversal. We had a powerful move up to what looks to be resistance at 436. It pulled back and then it gave us the event right at a support level and at the 8-period moving average. So we are looking for a new high. We are looking for a new high, and the bullish reversal is an extremely powerful event. However, the event must occur in the best location. My entry was great. My option is small. So remember, we're not focusing on dollar amount right now. We're focusing on percentage. All right. So pay attention to the percentage. So now here we are. It looks like we're about to be taken out and that we were wrong. Although this bullish reversal is a very powerful event, nothing in trading is 100% guaranteed. Remember that. Nothing is guaranteed. It's all probability. So it's looking like we're about to have to cut the play. We have already started to breach our stop loss, but we're waiting for the candle to close because it could fake us out. But the 21-period moving average always gives us a powerful move, but it looks like we're about to have to cut the play because we are in the cut zone. So we took a $20 loss on this first trade, but that's okay because that's part of the game. So I could have flipped and went the other way, but I decided to switch from Tesla to SPY. And look, we're looking for this event. All right, which is the power bar from the 200-period moving average. Now, why did we switch? Because this event is an event that I'm more confident and comfortable with. I like a power bar from the 200-period moving average more than I like the power bar coming from the 21-period moving average. All right, so we jumped into 689 put on the SPY, and we are looking for continuation to the downside. So typically when we get a power bar from the 200-period moving average, that is the beginning of a move down. But as you can see, we've already come all the way from 697 down to 694, and we are looking for a continuation to the downside. But we have our stop loss right above the candle that we entered, so we're focusing on only losing one candle at a time. All right, the most we're going to lose is one candle, and we're looking to continue to the downside and profit on multiple candles. So again, our focus for this week is cutting the play and going the other way. We cut the Tesla play and now we're going the other way on the SPY. Okay, but I also want you to pay very close attention to how similar the pattern from Tesla and SPY are. Because a lot of us are trading Tesla with really small accounts, and what we should be doing is trading the SPY. All right, the SPY is a much easier to manage pacing. So it doesn't move $10 a day like Tesla in a matter of seconds. It's more measured, maybe about $4 to $6 a day. You might get some days $3 on the SPY. So the SPY is a little easier to manage, easier on your pockets. Tesla is very volatile. If you can handle that kind of volatility, then this is a good stock. But if you are just starting, you might want to trade the SPY. So here we are getting some continuation because this is a high probability event. This is a high probability setup. We're already at 20%. All right, we're already at 20%, but because we're just now moving from the 200 period moving average, I'm confident that we have more downside to make. So look at us. We're continuing to move down. Again, we have very, very small options under $100. I'm just going to give you all a few trades like this before we go ahead and turn it back up a notch. But I just want you all to see what's possible with small amounts of money, because this is all about building experience, understanding technical analysis and risk management. You don't need to come in here with $10,000, $100,000 and you don't know anything about trading. You're going to give it up. So you might as well start with the least amount of money as you can and practice staying alive and surviving, trying to see how long you can last trading in your account with a little bit of money, because that's really what it's about. If you can survive, you can thrive. Okay, so here we are. We're at 31%. So this was a really great move. If we would have had a larger option contract, we would be seeing more profits. Okay, so that's something to consider. But with great reward comes, a great possibility of loss. Risk is what they call that. The great possibility of loss. So here we are, 25%. Again, could easily take profits, but again, we're not just focused on events and location. We're also looking at levels, and the next level seems to be between 692.82 and 692.55. This blue and white line underneath. So we're looking to move down there, and as you noticed, I moved the stop loss down to this next moving average and big bar combination. So I put it above this bar now. So if it happens to move back up, we're not going to wait for it to take out everything that we earned. And that's something I should have did in the previous video. But we're going to stop it at this big bar here. And we're going to continue to move down. But once we get to this level, it's looking like we're about to form a double bottom. You already see one low, a huge gap up. We're filling in the gap, and that is likely to be where we're going to reverse at. So again, 31%, it's not about how much you make, it's about how much you risk. So because we're starting with so little bit of money, we have this was not an expensive option at all. All right. So again, this is about experience. You can start trading with $50, $100, and if you have to just dive in. You got to get your feet wet. You have to start somewhere. You can't just watch videos over and over and over again and think you're going to develop some kind of skill. You got to go in there and take your lumps, get beat up a little bit, get pushed around, and eventually you're going to land on your feet, and you're going to learn how to fight back. So let's get started. Let's take our time. Let's work on being confident, disciplined, and skillful. All right, so boom, we're going to go ahead and take profit, and that's how you do it. All right, when you admit you're wrong, you cut the play, you go the other way. Peace and love, and I hope you get rich. I'll see you in the next video.